Let's get right to the White House. CNN's Elena Treen is there. So much happening, Elena, in just the last few hours. Give us the latest.
That's right. Let's start with tariffs, John, because, look, this is something that the president had threatened to do. He was moving forward to do it more than a month ago, and now it is here. It's something that still, even in the final hours yesterday, as they were leading up to this new deadline of this morning, people on Wall Street, people on Capitol Hill were still hoping, and certainly, of course, Ottawa and Beijing and Mexico City were hoping that the president wouldn't move forward with, but now he has. I'm just going to break down exactly what these tariffs are. One is that we know that he has implemented the 25% blanket tariffs on Canada and Mexico. Those took effect this morning. But then he also bumped.
China just pulled the plug, and Trump hit the red button. After Beijing suddenly halted exports of rare industrial minerals critical to U.S. defense, tech, and clean energy sectors, President Trump responded with a shock emergency tariff. 25% on all Chinese industrial imports. Calling it economic warfare, Trump invoked national emergency powers, bypassing Congress entirely. Markets tanked, CEOs panicked, global supply chains began to crack. But this isn't just a trade move, it's a seismic shift in global power. Is this Trump's boldest move yet, or the opening shot in a new economic world war? Let's break it all down. The shockwave begins. China's supply cut announcement. In early 2025, the global economy took a gut punch. China abruptly halted exports of several key industrial minerals, materials critical to the U.S. tech, defense, and energy sectors. We're talking about rare earth elements like neodymium, dysprosium, and terbium, used in everything from electric vehicle batteries and wind turbines to guided missile systems and semiconductors. These aren't luxury items. They're the backbone of the 21st century economy. And suddenly, they were gone.
Already heard from China, who is retaliating with 15% and 10% tariffs on agriculture exports coming from the U.S. going into China. And also similarly, Canada has put additional tariffs in place hitting agriculture products. And that is key for American farmers here because they were hit with retaliatory tariffs in 2018, so much so that the U.S. federal government had to provide financial assistance for them. So yet again, they are taking the brunt of these retaliatory tariffs here in the U.S. And for U.S. consumers, this is coming at a very shaky time economically. Consumer sentiment fell in the month of February. Inflation is starting to heat up. And these tariffs bring a lot of uncertainty in terms of prices. And then consumers usually, as prices rise, they start to pull back. And that has made Wall Street here very nervous. You mentioned at the open there.
Beijing cited national security and domestic demand as reasons for the halt. But everyone knew the real motive. This wasn't about shortages. It was a geopolitical bombshell. After years of tit-for-tat tech restrictions, sanctions, and export controls from Washington, this was China's punchback, and it landed hard. Analysts called it the boldest economic move since the OPEC oil embargo of the 1970s, a deliberate flex of China's dominance over mineral supply chains. The result? Chaos. Within 48 hours, U.S. markets dropped sharply. Defense officials called emergency meetings. CEOs across Silicon Valley and Detroit went into crisis mode. The illusion of stable global supply chains shattered overnight. And for the first time in years, the United States was being reminded with brutal clarity how much of its innovation and security still depends on a country it increasingly calls its rival. And in true Trump fashion, the response wasn't quiet diplomacy. It was fire and fury. What came next would flip the global trade map upside down. Trump's immediate retaliation, emergency tariff decree. Trump didn't wait for the dust to settle. In a surprise primetime address, the president stood before the American people and declared a national economic emergency. With the stroke of a pen, Trump slapped a 25% tariff on all Chinese industrial imports, invoking emergency powers that bypassed Congress entirely. The tone was unapologetic. "This is economic blackmail, plain and simple," he thundered, "and America doesn't negotiate with bullies." The executive order sent shockwaves through the global economy. Chinese steel, electronics, machinery, all slapped with a fresh cost barrier. Trump framed it not just as punishment, but as a patriotic pivot. He vowed to launch a full-scale effort to rebuild U.S. mineral independence. "We will mine it. We will refine it. We will own it," he declared, echoing wartime manufacturing slogans. The crowd at the announcement rally roared. His base loved it, but markets braced for impact.
Perhaps we might have expected that from Beijing, as you rightly point out, Mark. Paula, let me bring you in. What we might not have expected 2 months ago is a tit-for-tat sort of trade war between the US and Canada. And today, Canada going so far as to suggest that it faces an existential threat from its neighbour. Walk us through what's been done out of the gate in response to these US tariffs. And Paula, what more could come from Canada?
Well, Becky, you bring up the salient point here, right? Canada has a free trade agreement that Donald Trump negotiated and signed in 2020. This is not China, someone that the U.S. had considered an adversary. This is Canada, and really it is ripping up the trade book, if you will, for what they have negotiated already with allies. So what is Canada doing? Well, it is hitting back with 25% tariffs on goods like meat and vegetables, dairy products, alcohol. Think about it, Becky. Anything.
Critics slammed the move as reckless, warning it would raise prices across the board and escalate tensions with China beyond repair. But Trump didn't flinch. He promised a new industrial renaissance, a mineral Manhattan project for the 21st century. One that would restore American self-reliance and punish what he called Beijing's betrayal of free markets. Whether he could deliver on that promise was another question. But one thing was certain: the economic war was no longer cold. It was scorching hot. And as Trump pounded the podium, the industries behind America's military, clean energy, and EV future were already starting to buckle under the pressure. Inside the industry fallout, who gets hit first? The aftershocks were immediate and brutal. Defense contractors were the first to feel the squeeze. Lockheed Martin, Raytheon, and Northrop Grumman reported delays in weapon systems production. Guided missiles, fighter jet components, and high-performance radars rely on rare earths that were suddenly unavailable. The Pentagon scrambled to secure backup supplies, but admitted behind closed doors, there is no short-term fix. The U.S. military's edge was now tied to a supply chain it couldn't control.
We are facing the most significant crisis of our lifetimes because of President Trump's unjustified trade actions and his threats to our sovereignty. Our response must be to build a strong economy and a more secure Canada. President Trump claims that Canada isn't a real country. He wants to break us so America can own us. We will not let that happen. We're over the shock of the betrayal, but we should never forget the lessons. We have to look out for ourselves. We have to look out for each other.
Next came the auto industry. EV giants like Tesla, Ford, and Rivian went into emergency sourcing mode, trying to lock in rare mineral contracts from Australia, Canada, and Africa. Battery production schedules were thrown into disarray. Ford's CEO warned investors of severe cost impacts and potential line shutdowns. Clean energy was also slammed. Wind turbine production halted, solar panels delayed, and utility-scale projects frozen midstream. The green transition had hit a red wall. CEOs across tech, energy, and defense pleaded with the White House for clarity. But all they got was escalation. Prices soared, contracts collapsed. Some firms began layoffs. Others warned of production shutdowns within weeks. The shock exposed what no politician wanted to admit. Decades of outsourcing left the U.S. vulnerable at its core. And with Trump turning up the heat, those vulnerabilities were now center stage. But this crisis wasn't just hitting U.S. shores. It was triggering a worldwide scramble, and America's allies were about to make some unexpected moves. A global ripple. How allies and rivals react. The world didn't wait to see how the U.S.-China showdown would play out. They moved quickly to protect themselves. Japan and South Korea began stockpiling rare earth minerals, triggering bidding wars and hoarding that sent global prices skyrocketing. These two industrial powerhouses relied just as heavily on Chinese materials, and they weren't about to be caught empty-handed. Tokyo signed emergency trade deals with Australia and Vietnam. Seoul moved to fast-track mining projects in Mongolia. The rare earth gold rush had begun.
Saudi Arabia's holding of U.S. treasuries have reached their highest level in 4 years, with the kingdom's central bank holding $144 billion in U.S. government bonds. This now accounts for almost 35% of its total foreign assets, a notable increase from previous months. The share of U.S. treasuries has surged, reaching the highest proportion since February 2020, and that is when the pandemic first impacted global markets. Despite a decline in total foreign assets, which have fallen to the lowest since February 2020, Saudi Arabia has continued to increase its U.S. Treasury investments. As of October, total foreign assets stood at $411 billion, down from nearly $500 billion at the start of 2020. This decrease is partly due to a $40 billion transfer to the kingdom's sovereign wealth fund, the public investment fund, and spending to support government expenditure.
European leaders, meanwhile, condemned both China's export cuts and Trump's retaliatory tariffs. Brussels warned of dangerous supply chain nationalism and called for global coordination, but few listened. Germany's economy minister expressed frustration. We're watching the two largest economies turn minerals into missiles. The EU launched an initiative to source critical materials from Africa, while quietly urging member nations to brace for disruptions across automotive and energy sectors. And then there was India, emerging as the unexpected winner. New Delhi rushed to offer itself as an alternative supplier. India's rare earth production is small, but rapidly growing. Within days, U.S. diplomats arrived in Mumbai to explore fast-tracked agreements. India saw opportunity. Meanwhile, Russia remained ominously quiet. Kremlin-linked media praised China's decision and hinted at economic rebalancing. Some analysts feared what that silence meant, a new axis of economic warfare forming behind the scenes. And as the world scrambled to realign, one truth had become unavoidable. China's move wasn't a bluff, it was a masterstroke, and their grip on the world's most critical resources was decades in the making. China's long game, strategic resource power play. This wasn't a reaction, it was a masterclass in long-term economic warfare. For over 2 decades, China quietly built the most powerful position no one talked about, controlling up to 70% of the world's rare earth refining capacity. While the West obsessed over oil and data, Beijing was stockpiling the materials that fuel the future. Neodymium for wind turbines, lanthanum for EVs, yttrium for defense systems. Now they were pulling the trigger. This dominance wasn't luck, it was a state-backed strategy. Chinese firms bought up mineral processing plants across Africa, Asia, and South America. They subsidized refining capacity at home, driving Western producers out of business. While U.S. environmental regulations shut down local mines, China ramped up production, building entire cities around mineral refinement. The result? A global economy hooked on Chinese supply lines. And when Washington started choking off China's access to semiconductors and chip tools, Beijing didn't retaliate with missiles. It hit with minerals. Xi Jinping called it a necessary correction to global supply imbalance. But analysts saw it differently. This was China's Suez Canal moment, a raw demonstration of what leverage really looks like in the 21st century. No troops, no tanks, just a spreadsheet, a shipping ban, and the world scrambling. Beijing was done reacting to Western moves. It was now making them, and forcing the U.S. to play defense on a battlefield it didn't even realize it had lost. But while China played the long game, Trump was ready to bulldoze his way back into control. And his counterattack wasn't subtle. It was industrial warfare, American style. Trump's economic warpath, beyond tariffs. Tariffs were just the opening volley. Now came the real fight. Trump declared a mineral independence emergency and signed a sweeping executive order to fast-track mining permits across the country. Rare earth sites in Texas, Wyoming, and Alaska Some stalled for years over environmental concerns were suddenly greenlit. "We're not asking permission anymore," Trump said. "We're taking our country back." To his supporters, it sounded like a return to Roosevelt-era resource patriotism. To critics, it sounded like economic recklessness. At the heart of the plan, a $10 billion national minerals initiative. The package included subsidies for mining equipment, tax breaks for domestic refiners, and even defense contracts for companies willing to shift supply chains away from China. Silicon Valley companies like Apple and Intel were encouraged to commit to US-based sourcing or risk losing federal support. But the boldest threat was saved for Chinese tech firms. Trump hinted at a new crackdown on TikTok and Huawei, reviving legal challenges and suggesting a total ban was back on the table. Environmental groups sounded the alarm, warning of a scorched earth approach to supply chain nationalism. But for Trump, it wasn't just about minerals. It was about momentum. The policy blitz wasn't designed to stabilize markets. It was aimed at creating a rally around the flag moment, where American resilience could be weaponized politically. He painted a picture of an America betrayed by China, failed by globalization, and now rising from the ashes to reclaim its industrial throne. But while Trump waged his war at home, Wall Street was in freefall, and investors were bracing for a financial storm with no clear end in sight. Markets, metals, and mayhem, the financial fallout. By week 3, the markets were bleeding. Wall Street dropped 800 points in a single day, triggered by fears of a critical materials recession. Shares of EV makers, defense contractors, and clean energy companies tanked. Even tech giants like Apple and Nvidia faced panic sell-offs as investors realized how deeply entangled their products were in Chinese supply chains. The message was clear. You can't build the future without the minerals that power it. Rare earth prices exploded, some up by 200% overnight. Traders scrambled to corner the market. Hedge funds pivoted from AI to lithium. Metals became the new oil. Mining stocks soared, even as the industries themselves warned of delays, bottlenecks, and at least 12 to 18 months before any meaningful increase in domestic production. Venture capital flowed into obscure startups in Utah, Nevada, and Saskatchewan. Global commodity markets spun into volatility not seen since the early days of the pandemic. Meanwhile, inflation fears returned. Rising material costs began spilling into consumer goods, tech prices, and auto manufacturing. Central banks across the G7 issued coordinated statements urging calm, but the financial world wasn't listening. Analysts started throwing around terms like mineral shock 2025, comparing it to the oil crisis of the 1970s. But this time, there was no OPEC to negotiate with, and no strategic reserve to tap into. America was on its own, and that brought the crisis to its final stage, no longer just about supply chains or tariffs, but the deeper question echoing across every capital. Is the world fragmenting beyond repair? A defining battle, economic independence or global fragmentation. This was no longer about minerals, it was about the future of globalization itself. Trump framed it as a defining fight for economic sovereignty. "We built the world," he said in a fiery campaign-style speech. "Now we're building America." His administration painted the crisis as an opportunity, a chance to finally bring back industrial power, energy independence, and domestic jobs. For his supporters, it felt like a long overdue course correction. For his critics, it felt like an economic version of isolationism. Global leaders weren't so sure. The Biden camp warned that Trump's scorched earth policies risked long-term damage to trade alliances and inflation spirals that could hurt middle-class Americans. European leaders urged de-escalation, calling for a rare earth diplomacy summit. Canada, Japan, and India pushed for a new supply chain alliance. But without China, it was just a patchwork. The global economy wasn't realigning, it was fragmenting. And investors, businesses, and ordinary workers were stuck in the crossfire. One thing became crystal clear. This wasn't just a trade war, it was a systemic reset. The era of seamless global supply chains, cheap components, and just-in-time logistics was collapsing. In its place, a new world, one shaped by economic nationalism, strategic materials, and geopolitical survival. Whether that world becomes stronger or more unstable depends on what happens next and who's willing to blink first. Drop your thoughts in the comments. Are we witnessing America's industrial rebirth or a global economic breakup? Hit like, subscribe, and stay tuned. Because this battle, it's only just beginning. Trump says this is about defending America's future, but critics warn it could spark long-term inflation, job losses, and a fractured global economy. China isn't backing down. Markets are on edge, allies are scrambling, and the world's most critical. Industries just became a geopolitical battleground. This isn't about tariffs anymore. It's about control. Minerals, money, and military readiness are now on the line. So, what happens next? Rebuilding independence or total collapse? Smash that like button, drop your take in the comments, and subscribe for more. Because one thing is certain, this economic war is just getting started.